Welcome to Tradespoon. My name is Carpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable where we talk about current market conditions and answer any questions you might have. If this is your first time, please visit optionsclearing.com to understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. All right, before we jump into trading psychology, let's talk about current market. So positive news this week are earnings from Meta and Microsoft. You can see Meta continues to grind higher. After the earnings, Microsoft had a very strong earnings, almost at all-time highs. I mean, still, but 2025 almost at the 2025 high, January high. So Apple and Amazon are underperforming. So not all stocks are going higher. And we have Netflix continue to make new highs. In terms of interest rates, right? So the positive news are earnings are better than expected, right? Banks had a decent earnings. Industrials, General Electric, Triple M had good earnings. Now technology stocks like STX, WDC were the signals today. They all have positive. So it means that people are spending money on servers, on licenses, and on infrastructure, capex, and that's what Meta. I mean, Microsoft and Meta reiterated that their commitment to capital expenses and building out the infrastructure to support the AI. So that's positive, right? So earnings is a positive side. De-escalation on the tariffs side. It looks like we're gonna potentially reach agreement with Japan and South Korea. European Union is going to provide some kind of a proposal nearby. De-escalation in China behind the scenes, certain products, certain industry get exemptions, right? So that's positive news. This week, negative news are negative GDP, right? Some of it attributed to rise in imports, kind of front running the tariffs. A lot of companies, people are front running the tariffs, so GDP turning negative. Employment continues to cool off. Soft data continues to deteriorate. Soft economic data continues to deteriorate. So that's the negative news. 10-year yield is stable. We were talking about 4.3. This is going back to the peak of 2022 recession, right? October 22, we were at 4.3. We're right to the penny at that level, right? October of 22 there. So this is important kind of a level. The fact that we're just trading sideways since February, I think that's positive. So yield is stable. It's not too high. It's not too low. Because if the yield gets to 4.8, that's stagflation, fear of resurgence of inflation. And if it drops, below, I would say 3.6, then probably fear of recession, right? So we're in the middle of that zone. So I think that's positive. Dollar pull back, right? We had a strong rebound from the lows. Today we're down, but it's stable, more or less stable, not dropping below 100, oversold. But stable. So that's also positive. High grade corporate bond pullback, high yield pullback, but stable. We had a nice sharp rebound in high yield, which is also positive for the market. VIX is a 22 handle, so we're almost back to the historical average. Right? Historical average is 20. So again, less fear in the market and a lot of positioning supporting the market, right? If you look at the futures data, you can see even in most positioning is actually in June, not in May. Usually it's the other way around. So I think May and June, we're gonna be trading sideways with the bullish bias, right? First things first, we do have a lot of overhead resistance at 5,700, and then you have a lot of overhead resistance at 5,800, right? 5,800. So bulls for the momentum to continue have to get above, and this is very large gamma, right? Think of these bars as just sum of all the people and all the companies or in all the institutions buying or selling puts and calls with that strike price, right? And dealers have to sell them, and these levels means that, as we approach in 5,700, dealers are forced to sell. Right, so you need a positive catalyst for the market. Something positive has to occur in the market to break 5,700. I don't know what that is. We have unemployment data, we have earnings behind us, so we'll see. But for now, there is an overhead resistance, and the next level is 5,800. Not much, all the way to 6,000. But I think that's your resistance number one, all right? And this is your resistance number two. Right? If you look at the 2 standard deviation move, or sorry, 1 standard deviation. So let's just concentrate. We're trying to figure out. Well, first let's look at stock for Tradespoon. Right? So we're trying to figure out what is the next move in the market. Model actually, we're in May, so model takes into consideration the price action after the Liberation Day, and you can see, surprisingly, the trend hasn't changed. I mean, it turned basically flat, zero. It was slightly bullish, now it's flat. And it sees that for the months of May, not much momentum above 565 level, and we're already at 565. So for the next few weeks, for the next few months, it does see that potentially in the summer, we could get to the 580 level, 585. Right? I agree with the model. So you can see there is a deterioration in the momentum. You could see revisiting of the lows, right, 5,000 level. But I think between now and July, and potentially between now until the end of the year, I mean, some people think that we will make new lows. I think something negative has to happen in the market, some kind of a black swan event for the market to break down. So I'm not, until that event happens, I don't think so. But I do think we can revisit the lows in the next couple of months, and so does the model. Right, so I would not be surprised if we get to 480, 5,000. Go especially August, September. Maybe not by July, but August, September, were usually bearish time of the year. October, I would not be surprised to see the lows again or near the lows. And on the upside, I mean, we could get to the highs. 6,000. I mean, it's possible, I guess. Maybe marginal new highs, but more likely than not, market is going to have a hard time breaking above the 585 print. So this is a model, Tradespoon model, based on the learning on the price movement, the volume movement, and earnings data, and make predictions, right, inferences of where the market can go based on our algorithms. If you look at the SPX position, the picture is not that much different, right? 5,700, 5,800. I mean, there is a 6,000, but it's been there since, when we were at lows. So it's not something new. But large institutions like JP Morgan's doing these cover call strategies, you do have very large position at 6,000, right? So getting through 6,000 is going to take a lot of effort, right? Just like at 5,000, we couldn't get through 5,000 level because there was a lot of position that acted as a support. Market is going to have a hard time getting above 6,000. But first thing first, we have to get above 58, 5,700. So 200-day moving average. So that's kind of your next level of overhead resistance. So if I just look at if I remove weekly options, just look at the May and June. Let's just look at May and June. I mean, we'll have more clarity about that 90-day delay in the tariffs in the next couple of months, right? There'll be a more clear picture. We'll have earnings from NVIDIA, which is a big part of QQQ and semiconductors and spiders. So basically, based on the supply and demand for options data, for options contract in SPX, you can see 1 standard deviation move would be 5,800, somewhere between 5,800 and 5,900, right? Between now and June. We're talking about May, end of June. So scenario number 1, we break above 5,800, right? And we get to that 6,000 level, right? So that's scenario number 1. Scenario number 2, we're trading somewhere in this region. What our model 585 said, okay, so somewhere, that's the distribution of possible outcomes, right? Going back to bell-shaped distribution. So somewhere between 5,800 and 5,400. That's scenario number 2. 5,400, 5,300. And scenario number 3, we're revisiting the 5,000 level, the low, so 4,800 to 5,000. So that's scenario number 3. So scenario number 3, something has to happen between now and June, end of June. I mean, escalation, right? Maybe the 90-day, if there's an announcement that 90-day pause is off the table, and now we're imposing 20% tariff across the European Union and Mexico and Canada, then most likely we're going to revisit the lows, right? So that's scenario number 3. Scenario number 2, no new information, right? Earnings season is over, still uncertainty about what's going to happen with China, still war between Russia and Ukraine. Okay, then scenario number 2. We just trade in that one standard deviation move somewhere between 5,800 and 5,400. And scenario number 1, there's a peace between Russia and Ukraine. We're gonna dig rare earth metals in Ukraine. Earnings are stronger than expected, inflation drops, right? And we reach agreement with most countries except maybe China. But there's already exemptions in some of the products that participate in the exchange between China and the United States. So, it's not as bad as everybody thought. So scenario number 1. So how many of you, and these positive, why is this important to do these rehearsal exercises? Because that can help you determine position size, right? And trading position size is very important. If you think we're going to get to 6,000 on SPX, how much money are you willing to invest to support your opinion? If you think that the market is going to revisit the lows, how much money are you willing to invest in your hedge? And without looking at both scenarios, positive and negative, you don't know, right? You don't know, and that's the most common mistake, right? You get overly bullish, right? You get very optimistic, and you put, all your cash into positions, and then the market doesn't cooperate and goes the other way, right? You want to avoid those situations. All right, so how many of you say, first of all, can you guys hear me? Probably should have checked that before. Bill? Let's see, audio is fine. Mark, okay, you guys can hear me. Okay, great. I was worried about it. Usually you guys more proactive, but very little participation. All right, Mark 2. Ed, Kevin, Michael, Mark, Peter, Ron, J. Crystal, Financial, William, Bill. What do you guys think? 1, we're gonna V-shape recovery, retesting the highs by June. 2, we're trading in the choppy sideways market. And 3, we're revisiting the lows. Anyone? Ron, Peter, Bill? Okay, perfect, thank you. Mark 2, Michael 3. I'm gonna go with 2. I think it's a choppy market. We're gonna have these positive, negative news. I don't think it's gonna be anything big, right? Because if we didn't sell off on negative GDP, I don't know what else can we sell off on. And we're, more importantly, there's a lot of positioning in June and May contracts, right? People are well positioned to defend their positions, by buying these sort of puts on SPX and spiders. So my vote goes to 2. Right at 57, we're already at 5,700, 5,700, 5,800, where I would start raising cash. If we drop to 5,400, 5,500, this is where I would start deploying my cash, right? And anything in between, it's a flip coin flip. Choppy market. Yes, I agree. And that's why I put 2. Okay. Any questions in terms of position size and support resistance levels and what to expect in May, June? All right. How do we help on Tradespoon? So we talked about Stock Forecast Toolbox. This is one of our main models. Basically runs either every 5 minutes or every day or every month, right? Depending on your time horizon, right? 10-day, it's extremely bullish, right? We have unprecedented rebound. I think at this point, probably close to 20% rebound, maybe more, not more, 20%. I didn't check for a couple of days. Let's measure this thing. 4,800 to 50, 669, 18%, so a little bit more, 18%. So roughly 18% rebound, which I still think we're trading in the bear market, and this is a rally in the bear market. We've seen since, in the past 25 years, whether it's, global financial crisis or internet bubble, we've seen 20 to 25% rally in the market. And this is one of them where we already at 18%, we could get another 5%, right? We could move another 200, 300 points, and that would not surprise anybody, basically. So that's a 10-day prediction. Very strong move to the upside. 6 months, obviously, model is a lot more conservative, right? Basically neutral, saying that we're just going to trade in a choppy market, right? If you see 500 in the next couple of months, don't be surprised. If you see 585 level in the next couple of months, also don't be surprised. So, okay, so that's stock forecast toolbox, and you can enter any stock. You can enter some of the future contracts to determine, if you want to do the same analysis on NVIDIA, right? Very popular instrument, right? Stock. Short term in uptrend facing the overhead resistance. Long term, very bearish, right? It's over, I think, close to 50% sell off in NVIDIA, top to bottom. Yeah, 45%. So 45% pullback in NVIDIA, right? So long term, it's obviously trading in the steep downtrend. Short term, it's trading in mild uptrend, which makes sense. So that's stock forecast toolbox. You can also go enter your symbols that you're trading. These are some of the signals from today. ICE, CTSH. ICE is up 1%. CTSH is up, 2%. Spiders is up. STX is up. So these are some of the trade ideas from today. I'm keeping an eye on them in my watch list. You guys can create your own watch list under the account. You can go to company screener and enter, look at which sectors are outperforming the market. This is as of, May 1st. It gets calculated on May 1st. Some of the electronics, semiconductors, seems like the model is turning bullish. What else? But more insurance, right? Your insurance, Allstate, right? Progressive. Some of the internet companies like Amazon is doing better. Metals and miners, right? GDX of the world, 44%. Okay, so utilities, some of the utilities company, 35%. So you can see which sectors and which stocks can give you some of the opportunities by looking at this. And again, this data gets updated once a month on company screener and on 6 months prediction. So that's stock forecast toolbox. So these are the tools to help you navigate market volatility if you want to manage your own trades. If you're looking for signals, you can go to Active Trader. Active Trader gets updated every day. Model runs after the market close around 8 p.m. And makes predictions which stocks will outperform the market, right? And then every Sunday, different model runs for longer term prediction that makes predictions for weekly trader and monthly trader, right? Longer term trading. So I like Active Trader short term, right? I'm aggressive short term trader. So today we saw, WDC, right? It basically identifies signal based on current momentum. WDC is strong uptrend, above 50, getting close to 200, above December lows, January, February lows. So it's bullish on WDC, right? And the idea is to enter the trade at 43.33 or 43.95 previous close, right? And close it at 44.39. If you do have a gap up because we had unemployment data that's better than expected, right? People were feared that employment will tick up. Gap was 44.71. Then it's up to you, right? You can basically enter the market open and, close it when it's up 1%, or you wait 15 minutes and then wait for, support like and then enter a position. But the idea is to split the trade into two. Here we're looking for 1% gain, 40 cents. And that's assuming VIX is below 20. When VIX is above 20, maybe you look for 2% move, right? Especially in high beta stock like WDC, right? On low beta stock like CTSH, maybe you look for smaller. So that would be active trader, right? You're risking 1%, maybe 1.5%, depending on the beta. You split the trade into two, and model suggests you the entry and exit prices. If you're not comfortable, if you're looking for leverage and you want to trade options, same idea, right? Western Digital has options. You can choose weekly options or monthly options, whatever fits your trading style. But instead of risking $44, you can buy 42.5 call for 85 cents. Entry point is still would be 43.40, right, or 44, but you're risking only 85 cents, right, and you're getting a leverage, right? So, but same idea. You're using underlying stock to enter and exit. Here you're looking for 40 cents, right, 50% return on your money, right, and you split the trade into two. So that's how you would trade using weekly options, right, or monthly options using Active Trader. So very popular service. I use it a lot to get into my own positions. And analogously, Weekly Trader. Weekly Trader model runs on Sunday, so data only gets posted every week. You can see that here. And you can see this week, it identify Walmart in uptrend, right? So if you, what's Monday? Monday was 28th, right? So if you enter at 28th at $91, right, or previous close 95, at this point it's up $4, right, 4%, then you would exit the position, right? So this data gets posted on Sunday. Monday you can make a decision: do I wait for 91 or do I $92, or do I just enter from Friday's close? If you chose Friday's close, same thing, you split the trade into two. Here the stop loss would be 2.5%. So I'm looking for 2.5%. On Walmart, 2.5%, that's reasonable. If it's NVIDIA or Western Digital, maybe it's 5%, right? You adjust for higher or lower beta, or based on your trading plan, right? You would adjust yourself. And same thing, if I'm risking 2.5%, then I split the trade into two, right? So I'm risking only one, and that's that. The risk management is displayed in most of our pages with the model, right? You start with 4 active positions at a time, and you don't risk more than 2.5%. And same idea, analogously, you can do options, right? If you want leverage, and if you want to leverage on Walmart on Monday, you could have got to options, click on view, and same idea. Instead of buying stock at $94, right, $94, $95, you buy 89 call for $6.10. So this way you only risk mostly you can lose $6.10, and the idea is if we do down 2.5% on underlying stock, you exit your option position. Right, so that would be the credit spread on WCO Walmart. How far would you go to expiration? If you're doing a credit put spread and expiration, I would go to June. I think June is pretty well positioned, right, in terms of hedging. So I think market is going to trade sideways. So usually, May is already too close. We're 2 weeks away from the May expiration. So I would go into June right now. June, you can go into July, but I would go into June. And if you're planning to sell out of the money put spreads. Chuck, thank you for the question. So that's how you would use weekly trader or monthly trader. The idea is the model provides you signals. We give you suggested entry and exit prices. We give you suggested option contracts or underlying equity, but you have to manage those entry and exit, right? A lot of people ask me, well, Vlad, what if Walmart gaps up on Monday, right? On 28th, I get up and Walmart is already beyond your entry point. Then I propose to sign up for Elite service and participate in live trading room, because in live trading room, I trade these signals and I tell you how I manage them. And then you can view, make these decisions, or you can watch the recordings, right? But there is no kind of a universal answer. Okay, if it gaps up or gaps down, this is what you do. You usually have some kind of a trading plan, right? And you have certain strategies or certain patterns you follow, and then if it gaps up, you always buy at the at that print, or you always wait 15 minutes. I personally, if it gaps up, I wait 15 minutes to find the support, and then I use that as my stop level, right? So, but everybody's different. If you actually want to know, so first of all, any questions on Stock Forecast Toolbox, Active Trader, Weekly Trader, or Monthly Trader? All right, if you want to know what I trade, then it's Elite Circle. I would go into Elite Circle, and here under Trader Log, you can actually see all the trades that I did, right? I'm trying to get out of General Electric spread. This has been a good trade. I'm out of Morgan Stanley. I'm reduced my Capital One financial position. So it's a combination of both stock and option trades. Some of the earnings strategies, I'm out of Amazon, right? I sold the credit put spread on Amazon. I bought a calendar spread, exit the calendar spread. So this is an example of both option trading, earnings trading, and stock trading. And you can participate every day. We have a live trading room, morning bell and closing bell. We also have recordings that you can watch. And you can enter your email or phone number to get an SMS alerts. Any questions on Elite Circle? We have research tools, right? Like seasonal charts. You can look at the seasonality, right? And our prediction, model is turning negative. So, we have probability calculator. And then, live trading room. All right. Any other questions? All right, if there are no other questions, I mean, that's all I have for today, right? I went over the tools, the picks, Elite service. We have other services, spread services where I only trade spreads, Robo-Invest is where I only trade Robo-Invest, and newsletters. We have a learning center. This is all free content that you can find on the website. All right, guys. Bill, welcome back. I'm glad you can make it. Thank you for joining. Everybody else, thank you for joining. It's good to see you, Peter, Chuck, Ed, Gene, Mark. Thank you for participation. Really appreciate that. Keep an eye on 5,700. Personally, as you can see, based on my trades from today, I'm trimming my longs. Right? I'm maybe not adding to my hedges, but I'm trimming my longs. Still overall bullish portfolio, but obviously less bullish than it was, a few weeks ago. All right. Thank you very much and have a great day.